So Bitcoin is the risk-off asset in the space, right? It's the most certain thing. Everything else is a risk-on asset that has more security risk. You have to analyze it. There's more. I think the best way to think of it is digital property. Also, you could think of it as the world's first digital commodity. The idea behind Bitcoin is to create perfect money, or another way to think of it is create perfect gold. If I could take the entire supply of gold, like 6 billion ounces or whatever it is, and if I could reduce it to 21 million gold coins, and then if I could dematerialize them so that they're weightless and magically I could move them at the speed of light and compose and decompose them. If I could split them into 100 million little elements we call Satoshis, and then I could store them in cyberspace. And if I could find an incorruptible software program that would keep track of who owns the 21 million virtual coins, then you would have Bitcoin. We put our money in cyberspace. We put computers in charge, software programs in charge, but then we distribute the software program so it runs on hundreds of thousands of different computers. And every computer has a copy of the same program in the same ledger so that nobody can cheat anybody. And any of the nodes that get corrupted get thrown off the network. So it's kind of a living creature distributed in cyberspace. And the purpose is to create a shared, immutable ledger of who owns what. And so the whole idea is you can't mine any more gold. It's just capped at 21 million. And you don't have to worry about some central bank or some custodian taking your gold and selling it to someone else and you don't know. And nobody can seize it. And the ownership of the Bitcoin is through the possession of private keys. So you can, in theory, own any amount of it, $10,000, $10 billion. And if you convey the private keys to someone else on the network, then the ownership moves to them away from you. And so for the first time, we've kind of got immortal money that can move at the speed of light and can be programmed on a computer. That's the big idea. Bitcoin is the world's first engineered monetary system. And so the protocol is meant to do one thing really well: keep track of who owns everything forever without breaking in a secure fashion. The other cryptos, some of them pursued something similar, but a lot of them pursue other objectives. They want to be crypto platforms for building smart contracts or issuing NFTs, or they want to run decentralized exchanges. And these are all different missions, and they generally end up with a lot more complicated code and different types of code. And if you think about creating life in cyberspace, my idea of life is a virus or a plankton, or bacteria. But there's someone else that comes up with an idea of life like a flying eagle. Okay, so is an eagle life? Yeah, but is it like a swarm of hornets? And is it like bacteria? No, it's a different life. So Bitcoin is engineered to be this base layer of the entire economy, the monetary network. And, and the thing that's unique about it is that it's been copied, hundreds, thousands of times, and there have been 20,000 different cryptos that have been launched. The issue is which one is best suited to be the fundamental, technical, ethical base layer of the cyber economy. And you didn't know for 12 years. You only know after you've attacked it 25,000 times and copied it 25,000 times, and they've all failed. So Bitcoin today is the winner of this global struggle to see what will be the dominant digital monetary asset in the world. And what makes it unique is it's the strongest, it has the most energy, it has the strongest network, it has the most capital, it has the most support, it's the most robust protocol, it's the most unbreakable one, it's the one that's been tested the longest, the most indestructible one. And of course, the most well-known one. It's like the Coca-Cola of digital money. And so you've got the strongest brand. I think that Bitcoin is unique. I mean, Bitcoin is a property It's like buying a block of Manhattan in cyberspace, cyber Manhattan. It's like Manhattan. And there's a million people that want to launch other cities. Like I have another idea for a city, but it's not Manhattan. So the risk of owning anything else is orders of magnitude higher. The return is orders of magnitude lower. I would liken all the other cryptos. They're like investing in small startups, right? Like there's Apple Computer, and then my cousin has an idea for a mobile app that's compete with Instagram. Okay, so there's like 100,000 mobile apps launched, and 99.9% of them all fail. And then one of them will be WhatsApp or Instagram and Snapchat. So you might get a Snapchat, but you'll probably get one of the losers. And it's not the same as investing in Apple stock, which is like holding the broad-based index of all mobile functionality. So Bitcoin is the risk-off asset in the space, right? It's the most certain thing. Everything else is a risk-on asset that has more security risk. You have to analyze it. There's more competition. There's more complexity. There's more regulatory risk. And if you're a specialist, like a venture capitalist, and you want to basically spend your full time analyzing the space, maybe you can invest in that space. Let's just talk about why would you want to own property? If the money supply is expanding at 7% a year and you own property and it's scarce and desirable, your property will probably go up in value 7% a year. And that's the history of property for the past 100 years. So when you get to a point where you want to be invested, if you have money you want to save and give to your grandchildren, the least risky thing to do is put it in a scarce, desirable property that some affluent, intelligent person will want to buy from you in 30 years or 100 years. So Bitcoin fits that bucket, and it kind of competes with owning a building or owning if you wanted to have a second rental home, right? You would buy a second home and you would Airbnb it or you would rent it. And the benefit of that is you're kind of invested in property and you can maybe put a mortgage on it so you can leverage it up. And then the detriment is you got to maintain the home, and a storm might hit it. And then if nobody rents it from you or they trash it, right? Maybe you can't rent it at certain points in time if it's in the wrong place. So what if I could snap my fingers and convert your rental Airbnb apartment into a Bitcoin? It lasts forever. You don't have to repaint it. And then you can teleport it to any place in the world where anybody needs it for like the Japanese Olympics, or you can move it to the Cannes Film Festival, and you find the highest bidder. And then when they don't want it anymore, you bring it back and you teleport it to New York or Paris or London. So think of it as like your digital apartment that you can put a mortgage on and that you can rent out to the highest bidder, that you can also carry around in the palm of your hand and hold on an Android or an iPhone. Now ask yourself the question, how much of your portfolio do you want to have invested in that kind of property? And then maybe you want to invest in Facebook or Apple, or you want to invest in a stock because you like that. Or maybe you want to speculate or gamble your money. So you go gamble some money, and then you have some money in a checking account because you got to pay your bills in the next 90 days. And so you divide your money that way. The checking account's least risky. The property is a little bit of risk, but not nearly as risky as investments in stocks. And then, of course, the speculations, the meme coins or the meme stocks or the gambling on the horse, that's very risky. Holding $1 million of cash in a bank is that it has been losing 7% of its value a year for 100 years, but it's losing about 14 to 21% of its value now. So you're guaranteed to lose 90% of the money you have in the bank over a decade in an inflationary environment. So that's a built-in risk. It's a ticking time bomb. So that drives you to say, well, I got to put it in property, or I got to put it in investment, or I got to gamble it. And that's what I would say to an individual. The house that I live in right now is 305 times more expensive than it was in 1930. 305. That means that the dollar has lost 99.7% of its value in 90 years. Now, that actually, if you back calculate that implies that the actual inflation rate of the currency has been about 6.5% to 7% a year for 100 years. So the real inflation rate, if you're calculating the price, the rate at which things you want to buy go up in price, the real inflation rate for 100 years is 7%. The government published inflation rate is 2%. The difference is the government's tracking a consumer basket of goods and they make hedonic adjustments. So they're telling you that you should be happy in an 800 square foot apartment made of drywall watching Netflix, and Netflix hasn't gone up. But 30 years ago, they would actually calculate the price of a bigger apartment or the price to buy a house, but they don't do that anymore. And they're not calculating the cost to buy assets. So if you want to buy something like a house on the beach, well, housing went up in price 20% year over year, 19.2% according to the Case-Shiller index. And yet the government says that the CPI is only up 7.9%. So the inflation rate, if you already own a house or if you don't want to buy a house and you live in your parents' basement, is 7.9%. But the inflation rate, if you're a first-time home buyer, is 19.2%. The answer you come to is the United States dollar's lost 99.7% of its value. It will lose 99.9% of its value over 100 years. And every other currency loses 100% of its value over 100 years. And your only hope to preserve your wealth is to convert that currency into a property. Like if you convert it into a house, you got a 305x return on your money, right? So just buy a house. But what's the problem with that? The problem with that is that Florida taxes housing and real estate at 2% a year. So if I convert $1 million of cash into $1 million house, I have to come up with $20,000 a year, and I lose the house in 50 years. And that's assuming they don't reappraise the house up, but of course they will. So in fact, if you convert $1 million of cash into a house in Florida, you'll lose all the money in about 30 years. So that means I got to go and I got to risk the $1 million by betting on a company, or I got to gamble the money, the $1 million. Why? Because there's no perfected money that I could just convert the cash into. Well, Bitcoin is the first example of an asset where you simply convert the million in currency into $1 million of Bitcoin. And then because you can't make any more Bitcoin, Bitcoin price appreciates at the rate of inflation. And it also appreciates with adoption. And it also appreciates with technology advance. So what I want is property in cyberspace I can hold in my head, carry around in my hand, that no one's going to take away from me and they're not going to debase. And then I'll just hold that for my life.